Onto your markets news now. Asian markets were firing on all cylinders in today's session, making substantial gains. The Nikkei share index was boosted by a weaker yen currency. Being an exporting nation, it usually serves Japan well when its currency is weaker against major currencies. Another boost to Japan's stock market was the latest Bank of Japan minutes. Didn't suggest a hawkish tone on interest rates as was previously thought. Meanwhile, the Hang Seng and Shanghai Composite continued to ride high on the back of multi-pronged stimulus being introduced into the Chinese economy. The Nikkei share average ended the session up 2.8%. The Hang Seng index jumped by 4.16%, while the Shanghai Composite index rose by 3.61%. US stocks ended the session on a tepid note, this as investors continue to speculate about the Fed's interest rate trajectory. The Nasdaq was the only index that managed to end in positive territory, but it wasn't shooting the lights out. Market players are waiting for key tech stock results to give them a better handle on AI demand. The Dow Jones Industrial Average declined by 0.7%. The S&P 500 also closed down by 0.2%, while the Nasdaq Composite Index ended more or less flat, up 0.04%. Well, for now, the JSE is in the green, with the all-share index jumping 1.3% to 87,141 points. The rand is trading at 17.19 against the US dollar, 22.98 vis-a-vis the British pound, and 19.17 against the euro. Gold is trading at $2,673 an ounce, while platinum is trading at $1,014 an ounce, and Brent crude oil is trading just above $72 a barrel. Well, for more on the markets, I'm joined by Mohammed Wagli. He's a portfolio manager at Sasfin Securities. Thanks very much for joining us, Mohammed. Just tell us, what is driving the markets right now?
Always a pleasure to be on the show, Nompu. Thank you for having me. So just to paint a bit of a picture here, it was a really tough start to September for us, but as of now, we're actually about 3% up on the month, at least from a local perspective. So we are seeing quite a bit of optimism here in the equity market. I think probably the obvious thing here is that there has been a boost in sentiment on the back of the start of the interest rate cut cycles. Felt like we were sort of waiting forever for them. They finally came in about, I think, on Thursday last week. And subsequent to that, we are seeing quite a bit of sentiment, and then quite a bit of a boost in risk sentiment. And then you also touched on this earlier. We did see news coming out from the Chinese government yesterday, where they announced a major stimulus package. They're very keen to sort of get growth back to previous levels. Needless to say, that was great to hear, given that China's been under quite a bit of pressure. And if I'm not mistaken, they haven't really recovered to pre-pandemic levels. So I think those two things, sort of in conjunction with each other, have served to prop up the market a little bit. And, long may it continue.
So I had posed a question earlier, a couple of hours ago, and I'll stick with it, even though the rand is not as firm as it was yesterday, but the rand is looking quite unstoppable, firming pretty much every day. Where do you think it's headed? And do you think wherever it's headed, it's on a sustainable path?
That's an interesting one. So, look, we have seen, and I mentioned this earlier, we've seen quite a boost in the risk sentiment. So I think we are seeing a lot of dollar softness here. Really, we are, bearing in mind that we're not as strong as we were earlier this morning. I think we're around 17.23, but that's really as strong as we've been since the end of 2022. So I would say that, look, it is possible that we may see a bit more strength in the short term, and I mean the very short term here, but really with the US election in November just on the horizon, I do expect some choppiness, and I do expect that relatively soon. So we should see a bit of uncertainty creep into markets then, and I imagine that should benefit the weakening dollar, should see a bit of softness then from the rand perspective. So from my perspective, for the time being, this is a fantastic rate to take advantage of for anyone looking to buy some foreign currency, whether that's just to hold or perhaps, to use for an offshore vacation or something like that. But on the other hand, if you were looking to bring back your dollars to rands, if you can sort of afford to wait, I would recommend doing that.
Yeah, I just wanted to ask you about the PPI number. That came out for August at 2.8%, as opposed to 4.2% in July. That's a massive improvement in local inflation, and presumably that would augur well in terms of the Reserve Bank. Of course, it doesn't look at one print, but this would augur well because that's way below the midpoint of the Reserve Bank's target band.
Absolutely, and it's a good point, and I think one has to also consider that the Reserve Bank is primarily focused on combating inflation. So from that perspective, it does all go well. Very much so. So it'll be interesting to see sort of the impact. And I did mention sort of dollar sort of softness earlier. There is a component of rand strength as well, but I do think the predominating factor there really is the dollar weakness and the sort of rise in risk sentiment that we are seeing here locally.
Yeah, not that I desire for us to enjoy any further inflation, but why is the oil price steady as we go? I mean, with everything that's happening in the Middle East, in previous occasions, when stuff kicked off in the Middle East, the oil price would go mad.
Yeah, almost counterintuitive, really, for the exact reason that you mentioned. We did see the flare up last week, just in terms of those pager bombs and those sorts of things. But I think really where we are here is that the most pressing issue is the soft demand that we're seeing come out of the US and China, obviously the two largest economies. Now, in that respect, we did see a little bit of a respite yesterday on the back of that stimulus news, but it didn't really last long at all. So strangely enough, it does seem that the tension in the Middle East, even at sort of these depressed prices, is actually giving it a little bit of support and preventing it from falling lower. So what we really need to see in terms of further price support, maybe a potential rally or that sort of thing, is clarity that the demand from those two major economies is somewhat normalizing, because as it stands currently, it's quite depressed.
Yeah. Let's take a look at one particular company that came out with their results. Old Mutual, they came out with their half-year results. That's for the end of June 2024, reporting that adjusted headline earnings per share were up 7%, return on net assets were up 12.6%, while also indicating that their gross written premiums rose by 9%. Please just unpack those numbers for us. Is Old Mutual doing well relative to its peers?
I would say, broadly speaking, relative to sort of the reaction to the results, just in terms of the share price performance, I'd say that broadly speaking, this was relatively in line. I'd call it a solid set of numbers. They did also announce a small little dividend there of about 34 cents. But it does seem that, they saw some good performance from Old Mutual Insure. Premiums grew by about 10%. And I think what I saw, and I did quite like this, and we're seeing it really pretty much across the board with the results that we're seeing across sectors, really, from a local perspective, is that there's quite a bit of optimism going forward just in relation to the South African context. They did mention that they are, well poised to benefit from the rate cuts, well poised to benefit from the expected rate cuts. And there's quite a bit of optimism surrounding the government of national unity. So broadly speaking, without getting into too much sort of detail about the specifics on the numbers, it did seem like a solid set of numbers that relatively delivered quite well, but, not too much movement on the share price, which I suppose we take it as meaning that they did quite sort of meet their expectation.
All right. Thank you so much, Mohammed. We're going to leave it there. That was Mohammed Wagli. He's a portfolio manager at Sasfin Securities.